Welcome to the Economy Magazine. I'm Benjamin Chong Alfares with the top reports from the world economy. In today's show, as G20 nations promise a brighter future ahead, inequality lingers, and Atlantic City crumbles as gambling spreads. First, the headlines. The Ukrainian ceasefire was tested by battles between government forces and separatists, while Russia's opposition protested President Vladimir Putin's policy in Ukraine. NATO's Supreme Commander for Europe told reporters the number of events and rounds fired matched some of the pre-ceasefire levels. The fighting has cost $440 million of damage in East Ukraine, where more than 70% of businesses have shut down and food is becoming sparse. 2,000 tons of food, clothing, medicine, and water from a Russian convoy of 185 trucks was distributed on Monday to Russian-aligned forces in the war-torn region. Asian stocks fell on Monday, led by Hong Kong shares, as investors awaited data this week that could provide more evidence of a slowdown in China. MSCI's broadest index of Asia-Pacific shares outside Japan dropped about 1%. Shanghai was down 1.7%, and Hong Kong's Hang Seng was down 1.4%. Japan's Nikkei stock average ended down 0.7% after it marked its highest closing level since 2007 on Friday. China's flash manufacturing PMI reading on Tuesday could come in below the 50 level, indicating that manufacturing activity is contracting. The record initial public offering by Alibaba Group Holding underscores financial markets' appetite for new listings, giving investors renewed confidence in the market. Following Alibaba, IPOs in the U.S. have raised $69 billion this year, up from $62 billion in all of 2013, but still short from a record in IPO issuance set in 2000 of $105 billion. The S&P 500 is trading at 15.6 times projected earnings over the next 12 months, compared with an average of 14 over the past 10 years. And with Alibaba out of the way, there's still over 100 deals in the pipeline, though most don't have pricing dates yet. German engineering company Siemens is acquiring U.S. oil equipment maker Dresser-Rand for $7.6 billion. The acquisition will allow Siemens to expand its gas extraction capabilities and build up its presence in the U.S. energy market to capitalize on the shale gas boom. Dresser-Rand, which has the largest installed base of compressors serving the energy industry, has been seen as a takeover candidate for more than a year. Siemens will pay $83 a share in cash, a premium of about 37% to Dresser-Rand's share price in July, before reports about a potential bid boosted the stock. As the group of 20 nations promises an additional $2 trillion and millions of jobs to enter the economy, inequality continues to loom and linger and threaten global prosperity. Here's a report by Daniel Roth.
The finance ministers and central bankers of the Group of 20 Nations met in Cairns, Australia this weekend to discuss the global economy, international tax loopholes, and the multinational corporations that exploit them, according to the report from Reuters. The G20, which holds its meetings under heavy police guard to keep dissenting voices out, had a number of major announcements. Even as inequality grows and Europe's economy remains shaky, they said they are not far from adding $2 trillion to the world's economy, as well as millions of new jobs.
While the world economy is recovering, growth is uneven, and there are some obvious risks to the outlook. I am optimistic about what we can achieve if we work collaboratively. It is critical that we take concrete steps to boost growth and create jobs.
Nearly 1,000 proposals are floating around aimed at boosting growth by 1.8% globally by 2018. This number is not far from the 2 points aimed at when the group met in February. Some of the measures include ensuring that major banks have deeper reserves for emergencies and will not need to be bailed out. As well, there is an intention to clamp down on tax evaders with a focus on corporate moves to low-tax countries in order to keep public revenue up.
We have endorsed far-reaching initiatives which will arm our tax authorities with the information they need to identify tax evaders through the automatic exchange of information using a common reporting standard.
Reuters also reported that a group of protesters called on the G20 to take action against climate change in their proceedings. They were marching as part of the weekend's massive global People's March against climate change ahead of Tuesday's UN summit.
Today is the United Nations International Day of Peace and also the People's Climate March. But I don't believe that the real issues are on their agenda. It's about protecting the interests of transnational corporations and the banks.
The G20 Leaders Summit will be held in Brisbane on the 15th and 16th of November.
Over now to our Innovation Corner, where I-24 News reporter Natalie Ehrlich focuses on Israeli startups' appeal to foreign investors.
Welcome to the Innovation Corner at I-24 News. I'm Natalie Ehrlich. Well, Israeli startups have managed to attract a lot of attention from Silicon Valley, from Apple's acquisition of PrimeSense to Google's $1 billion acquisition of Waze back in 2013. And here to discuss, we're joined by venture capitalist Andreas Stavropoulos, a partner at DFJ in Silicon Valley, which has over $7 billion in committed capital. Thank you again for joining us.
Pleasure to be here.
What has been the driving force of Israeli startups? Why are they so attractive to Silicon Valley venture capitalists and also even tech firms?
Yeah, you know, our logo and kind of motto that we use at DFJ is think big. And I think more than any other background, Israeli entrepreneurs have managed to think big. I think it has to do, frankly, with the relative size of the country and its economy. If you start in Israel, the market here is relatively small, so therefore you have to think big from day one, and that has helped more than any other culture.
Well, which innovations are you most excited about today?
If I think about Israel, a lot of the background has to do with things like signal processing, algorithmic design, really deep intellectual property innovation. Some of the companies we're most excited with, of course I'm biased, is some of the ones we're involved with. I'm on the board of a company called Superfish, for example, that was just named in Inc. 500's list of the top 5 fastest growing startups for this year. In fact, the #1 in software. And what they do is they take images, and they're able to basically take any image and show you related images. So they do visual search directly by starting from any image out there. That has implications for e-commerce. It has implications for all kinds of recognition. So it's very exciting platform technology of the kind that Israeli entrepreneurs are really good at building.
Well, coming from Silicon Valley, in your perspective, why do you think that Tel Aviv has become such a hotbed for innovation and technology?
Israelis are all over the world. You have the Jewish diaspora. I'm Greek myself. The Greek diaspora is also quite all over the place. But I think it actually helps because you have people who come here self-selected from all over the world, sharing different ideas with each other, and are therefore able, as I said, to think of a global ideas, thinking big about applications that could apply across the board. So it's a natural proclivity for at least trying to build big companies.
We have seen a pattern, though, in recent years of Israeli startups tending to sell out for big bucks to these Silicon Valley tech firms. Do you think that we can see any of them establishing deeper roots within Israel?
Well, look, when it comes to NASDAQ IPOs, Israel is right up there. Other than US and I think China, Israel has the most publicly listed technology companies of any other place around the world. So there are quite a few that actually make it. Now, the reality is, whether it's here or the US, is that there's always consolidation in every technology industry. Not every company can be the next Google. So once these numbers start getting high enough, frankly, from an investor's point of view, it starts getting, and also from an entrepreneur's point of view, it starts getting pretty attractive, especially if there's a vision that can be accomplished within the company. Now, at DFJ, we actually try to encourage the entrepreneurs to think big, stay independent as long as possible. But at the end of the day, it's kind of a founder decision in most of these cases.
Well, you look at a lot of startups, especially here in Tel Aviv. What advice can you give to founders of startups here if they want to attract attention from Silicon Valley?
The world is becoming really smaller, so I would urge folks to talk and cast a wide net. There are investors in the US, in Europe, all around the world that are very interested in what's going on right here. So if there's ever a question of are we ready to talk to folks in Silicon Valley, I would urge folks to reach out. Folks like us that want to think big, that are looking for the new ideas anywhere in the world, want to hear about people as early as possible. And all of our emails or the ways to contact us are on the web. So reach out. The earlier the better. That is my topmost advice.
What exactly, though, can they do in terms of their business model to really be a magnet to these Silicon Valley venture capitalists or tech firms?
Well, what we find is that the founders that end up building big companies are usually motivated by things other than just making money. They're motivated to change the world, make the world a better place, and think big in doing that. So whether it is something that's a consumer application or something that has business applications, the best founders are usually motivated to take a very hard problem and solve it in a very interesting new way. So I would say think more about the problem you're trying to solve and how innovative the solution is than how much money you're going to make or what the business model looks like.
Well, thank you very much for your insight, Andreas Stavropoulos, a partner at DFJ, coming here to Tel Aviv straight from Silicon Valley.
Thanks for having me.
Appreciate it.
Thank you.
4 major casinos have closed already this year in Atlantic City. The resort used to have a monopoly on gambling on the U.S. East Coast, but in recent years, it's faced competition from neighboring states. Thousands are now out of work, but the city remains hopeful it can bounce back.
As the sun begins to set on Atlantic City's famous boardwalk, the lights on one of the casinos are shining a little less brightly. The Trump Plaza is the latest casino here to shut down. When the final shift ends at 6 a.m, only a couple of workers come out by the main doors. They say they wanted to leave the same way they arrived back in the casino's heyday.
We would never thought this would come to this, and I just feel bad for the people, man. There's so many people out of work.
Where do 8,000 people go and think we're going to get hired? They're never going to hire full-time again. I was full-time here for 26 years.
Trump Plaza is the 4th casino to close this year. The Taj Mahal, also formerly owned by property magnate Donald Trump, is expected to be the 5th. Long known as America's playground, the seaside resort thrived in the 1920s Prohibition era, when local leaders largely ignored the nationwide ban on alcohol. A decision to legalize gambling in the 1970s brought money flooding in. But this East Coast monopoly couldn't last forever, as the City Museum's archivist explains.
With the economic downturn in the recent years, other states have been looking for revenue sources and things, and so many other states have allowed casinos to come in, particularly in the states right around New Jersey, and that has kind of flooded the market.
The day after Trump Plaza's closure, the local union helped former staff sign up for unemployment benefit, subsidized healthcare and other services. Union President Bob McDevitt says the city needs to expand on its core attractions.
What makes Atlantic City desirable is the same thing that made it desirable 150 years ago. It's the location, it's the ocean, and it's the boardwalk. And if you use that as the bedrock for the industry, I think we're going to have a bounce back, and you're not going to see more casinos built here, but you'll see a lot of other amenities being built.
The city is now pushing new projects, including a conference centre and a university, to diversify the economy. Gambling revenues are now down by nearly half from their 2006 peak. Atlantic City hopes this is a readjustment to new realities rather than a nosedive, and that with diversification and a little bit of luck, the city can strike it rich once again.
And now for a look at some other reports from the world media in Media Watch with Daniel Roth. Daniel, thanks for joining us. Good. So I understand you have a little bit about the climate protests.
Yes, so yesterday was the 21st. It was a huge day. 400,000 people converged in New York City, and hundreds of thousands more around the world in over 160 countries around the world, to call on world leaders who are meeting at the UN on Tuesday to do something about climate change. It was the hottest summer on record. In the history of records, it was the hottest summer, and the level of carbon CO2 emissions are going up, not down. These are all the realities, and so this was 400,000 people. They had initially thought 100,000 people would show up. 400,000 people showed up to call on world leaders to essentially regulate the way we do business, regulate our economies so that the economy is, instead of being in conflict with the environment, is working within the bounds of the environment.
This is interesting, of course, because the G20 just met And the majority of their focus really was, of course, on money, and of course on all these different MNCs trying to evade taxes and this. But climate, was that discussed also at the G20?
A little bit. There was some mention of climate in a few speeches here and there, but most of it, people are saying, and one of the reasons 400,000 people showed up is because people feel like the leaders who are talking about it are not getting it through the law books, and that's the major difference.
Okay, because essentially everybody ultimately does end up feeling, of course, the climate change. That
at the end of the day, it's CEOs and marchers alike.
Well.
Yeah.
Right. Okay, well, Dan Roth, thank you very much for joining us on Media Watch. That's the end of this edition. It's a wrap for The Economy Magazine, your daily source for economic and financial reports at I-24 News. I'm Benjamin Chong Alfares. Follow me on Twitter at Chong Alfares and send us your comments via the feedback link. Join us again tomorrow.